Hi, ladies and gentlemen. Welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Welcome, everybody, to another IFRS update for 2020. I am Milan van Wyk, and I'll be your presenter for this session. So this session will focus specifically on the COVID-19 impact. Let's say the COVID-19 impact will be part of this session, just to see what the impact is and how it applies to your IFRS 15 standards, as well as IFRS 9 and IFRS 16. Right, so I'm just going to head over to the actual presentation. And then just quickly about myself. I'm a chartered accountant. I'm currently employed as a senior lecturer in accounting at the University of Johannesburg, and I hold a master's degree in international accounting. And I'm actively involved in education and training within the accountancy profession, and I'm also involved with the JSE Proactive Monitoring Project, okay, together with UJ. Great, so let's get started on this session. All right, so this is an IFRS update, specifically looking at COVID-19 as part of this update. So you'll see, there's so many things that you can discuss as part of IFRS 9, IFRS 15, and IFRS 16. Unfortunately, we don't have enough time. I can keep you busy whole day, but I've got a time limit on this session. So I have excluded a couple of things, and I added specific focus on COVID-19 on the particular standards. Right, so I'm just going to quickly just talk about COVID-19 on general IFRS reporting. So everybody knows about COVID-19. It's been a major impact in our livelihoods, and it had a major impact on the global economy, as well as South Africa in particular, right? So what happened is that a lot of businesses needed to limit or halt operations. You needed to change the way of doing business, and we specifically can talk about the travel and hospitality sectors, transport, retail, actually everything. Everybody is changing the way they're doing things because of this pandemic, and it disrupted the global markets. But even that, it also impacted how you report on IFRS, and that's part of why we are here today and why we're going to discuss the details. Okay, so I've just showed you how the COVID-19 pandemic can impact the balance sheet. And you can see basically, if you go through all the line items, just maybe cash and cash equivalents that either may be there, but all the other line items are affected by COVID-19. All right, and we're going to focus only on IFRS 9, 15, and 16 today. And it's all about, impairments. If you think about IFRS 9, if you think about IFRS 15 and IFRS 16, it's all about the changes that you had in your contracts, your rights and obligations that change. Then if you look at some other areas, the liability side, your IFRS 2 definitely can be impacted. And then also other liabilities again. So IFRS 9, again, playing a big part in interest-bearing loans. I have a maybe there, but it's actually there will be changes if you have payment holidays, etc. And that's the balance sheet. So if you're going over to other areas to look at, so if you look at statement of profit and loss, it will be your revenue recognition within IFRS 15 that can get impacted. Also, if you get government assistance, certain loans you might get from the government, IAS 20 will then definitely play a part. Then, if you look at other pervasive areas in the financial statements, going concern assumption in IAS 1, material judgments and estimates in under IAS 1, very, very important, and getting even more important under this pandemic, and then also post-balance sheet events. Great. So let's go and have a look at our specific focus for this session. I'm going to start off with IFRS 15, revenue from contracts with customers. And I'm going to firstly talk about where will the impact of COVID-19 be. And you'll see in the presentation I'll deal with all the steps, but I'm going to focus a bit more on the specifics of these steps that I've highlighted here. Right, so firstly, step one, identifying the contracts with the customer. So there basically, the big thing there is that the collectibility of your consideration that you are entitled to could be influenced by COVID-19, making it less probable because of the financial impact COVID-19 has on your customers. So you need to go and assess on your new contracts whether there is a possibility that you can actually receive your consideration and recognize revenue, because if there's no prospect of receiving any consideration, then you cannot see it as a IFRS 15 contract and cannot recognize revenue on that. Good. Also, contract modifications. A lot of people change their the way they do their contracts and how they've changed the rights and obligations in contracts. So there's a big chance that modifications will come on your path in your company that you are accounting for. Then in step 3, determining transaction price, and there I would just want to highlight that anything that is variable and that you need to estimate will get impacted by the COVID-19 pandemic. All right, and also there's a chance that you might have significant financing components within your contracts, but you need to go and assess that first. But there is a possibility, especially if you have debt relief or any extended credit agreements that you might have. And then step 5, again, the recognition of goods and services, and that might change based on the change in terms and conditions that you have in your contract. Great. So let's talk about the core principle of IFRS 15. So an entity recognizes revenue to depict the transfer of the goods and promised goods and services to the customer at an amount that reflects the consideration to which an entity is expected to be entitled to in exchange for those goods and services. So basically, it's all about showing how much revenue are you recognizing and when that should happen, and it must depict the value that you will get back for your consideration as well. Right, and the IASB incorporated a 5-step approach to account for this core principle of IFRS 15. And you can see there step 1, 2, and 5 deals with recognition, whereas step 3 and 4 will deal with the measurement within the particular standard. Then the big thing that you also need to understand and put a pin in it is the notion of control, which is a big part of the standard. Okay, good, moving on. So step 1, to identify the contract with the customer. I'm not going to spend too much time on this. I'm going to focus on the specifics on the impact that COVID-19 will have. So if you have a contract, remember that there needs to be certain criteria that needs to be met in order to have a valid contract to account for certain contracts within IFRS 15. And a specific mention that I do want to make is just on the last bullet point there. The collection of consideration needs to be probable. And they consider the customer's ability and intention to pay. And again, here COVID-19 may play a big role in changing your initial assessment or the assessment that you have on new contracts that you're entering into. Then, very important that all of this criteria is basically there just to establish enforceable rights and obligations. So if there isn't any enforceable rights and obligations, you don't have a contract. And that's what I'm also saying there at the bottom of the slide, that a contract does not exist if each part of the contract has a unilateral enforceable right to terminate a wholly unperformed contract without compensating the other party. So basically, if there isn't a downside in cancelling the contract and everyone can exit the contract without paying any penalties, then it's not an enforceable contract, and therefore it cannot be seen as a contract for IFRS 15 purposes. Okay. So moving over to a specific example on collectibility. So like we mentioned, we look at the intention as well as the ability of the customer to pay the outstanding balances. So an example, a real estate developer enters into a contract with a customer for the sale of a building for, just going to close it there quickly, sorry, for 11 million rand. The customer intends to open a restaurant in the building. The customer has little experience in the restaurant industry, and in addition, the COVID-19 lockdown regulation increases the uncertainty around the viability of the restaurant industry in the future.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.